Here are 3 ways to buy the S&P, and that is what we're going to talk about here on a day that it looked like everything's melting down. It looked like everything is the beginning of the end, right? Let's step back and not look at a 5-minute chart or a 30-minute chart or whatever intraday and look at the daily. Let's take a look at the daily structure on the S&P. First of all, it's still very much in an uptrend with very good support in the daily price movement range. We like this kind of movement because rather than buying highs in an uptrend, we can buy the dip. So what's the dip? The dip is the gray zone, and that gray zone is a volatility-based support level. All right, so I mentioned there's 3 ways to do it. Well, we can buy the S&P or we can buy the MES, which is the micro. But let's consider that all one way, and that would be the futures long position. If the ES futures are trading down into the daily price movement range, the SPY ETF is likely doing the same thing. So in this case, we can look at the SPY and say, all right, well, if you're in the gray zone and the S&P futures, which is the more 23-hour version of the S&P, is also in the gray zone, we can look at long calls. One way to look at long calls in the S&P would be to look at the March 15 expiration. Or if you just want to take this into, say, Tuesday, right? Let's say you want to take this through the weekend into the 12th. You can buy the March 12th calls because the less time you buy, the less expensive the option. Rather than going out of the money to make something affordable, think about how can I buy something in the money? Like a Tuesday 5/12 call, right? That's one way to look at it, a Tuesday 5/12 call. Another thing that I want to do is focus on S&P and not focus on tech, right? Because while NVIDIA is going to affect the S&P, I don't want to deal with the NVIDIA SMH influence in as direct a way as it will be in the NAS. Let's dilute it a little bit. So I don't want to go with the Dow because the Dow doesn't have the same kind of structure, nor is it in the zone that I want. So this is where the S&P is really the best choice for this play, right? S&P futures, micro S&P futures, and then SPY. Now, I know a lot of folks say, Rag, what about SPX? Can we do anything with the SPX in a situation like this? And yes, absolutely. Take a look at the gray zone. Now, a lot of folks will say, Rag, can we sell the puts, right? Or can we buy calls? Absolutely. I would prefer to go with the calls in the SPY, but if you're going to go the premium route, yeah, obviously SPX would be fine. Try to take advantage of the theta decay. So as price action selling off, the puts are more expensive. Prioritize that momentum, that bearish momentum for selling premium in the direction that everyone's tripping over themselves to get into, which is the short side or the put side, right? Taking advantage of weakness. So you can sell premium there. Now, this is a Friday, so this is always the challenge. I'm cutting this video at 2:03 p.m. Eastern, so 2 hours before the close. There's an old saying, don't fade Fridays. And if I'm going to put on a position like this, what I like to do is focus on about the last hour of the day. Because if I start to see weakness kick in by 3:20 p.m. Eastern, there's a good chance that I'm going to continue to see some weakness into 3:40. So this means this trade should really be put on pretty much within the last 20 to 30 minutes of the day, because if there's weakness into the close, we'll likely see that weakness echo into the Sunday open in the ES and into the Monday open on the SPY and SPX. So the timing matters big time because Friday trades are tricky. Now, if you're willing to take a little bit of heat, meaning once you buy the SPY call, right, so those are 3 ways: ES futures, which include the micro, SPY or SPX. Right? If you're willing to buy the SPY, and again, you want to go out to say, for example, really no closer than Tuesday, so the 12th March, 5, and again, I want to look at the 511, maybe the 512s, right? These are $3 and change. I'm going to be open to having to risk at least 25 to 30% of that premium. Not 100%. I don't do max debit. I don't hate my money. So what I'm going to do is look at an at or slightly in the money, no more than, say, 510. Anything lower than 510, a 510 call is overkill. I don't need to be that deep in the money, but I don't want a 5, 13, 14, 15, 16 call either. I don't want to go that far out of the money either. So as we dip in there, if we can hold the support, then we're in good shape, right? Hold the support of the daily price movement range into the close. And that's the 3 ways I would focus on buying the S&P. Really simple. If you have any questions, feel free to ask below. If you have any questions on the indicators I'm using, let me know. But this is the daily price movement range as support in an overall uptrend in the S&P. And all this maps from what is happening on the most complete version of the S&P, which is, from a time perspective, just a sheer amount of hours open with liquidity. That would be the ES futures. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.